2, 1.
Welcome to Made for More Living.
One small step for man.
With Johnny Jennings.
Kick the tires and light the fires, Big Daddy.
The fastest and most exciting hour of news, events, and real estate in Northern California.
And this is a fact that was proved.
Powered by eXp Realty. Online at madeformoreliving.com.
Does everybody know what time it is?
Get ready. Here we go.
Can you buy a house using crypto? That is a question I am asked more often. Well, let me put it this way. If I was asked that question every single time I got a little piece of crypto, I'd have a lot of crypto.
Really?
Yeah. People are always curious.
So you have clients that come up to you and they're interested in buying a house and they want to know if they can use their cryptocurrency?
Sometimes it's more like a thought experiment, but people are genuinely wondering, like, hey, what about crypto? How is this going to play a factor? Can you buy a house with just crypto? And so today on the show, we have lender extraordinaire JJ Mack with American Pacific Mortgage. And JJ, you actually have some experience with this.
I do, man. Yeah, nice to be here. Thanks for having me. Appreciate you, Johnny. And I actually love cryptocurrency. I love everything about it, what it stands for. I've been doing it since 2017.
So what do you love about it?
I'm serious. I love that it's
un-American, in my opinion.
Really?
Yeah.
It's like the most American thing.
Yeah, well, why is it American? Because I kind of feel the same way as Matt. Yeah.
Because we have the ability to go and find a currency that we want to use. I don't have to stick with $1 or a piece of gold or a credit card. Why can't I use cryptocurrency? It's not like it.
It's very, not legit.
It's very diplomatic.
Not concrete. It's almost like artificial intelligence. It's artificial. What is it based on? What is it based on?
What is gold based on? What is the dollar based on? Better. Let me ask you that first.
I mean,
it's based on the confidence of the government.
Yeah,
exactly.
And the value we put into it. And so you're right. If we decide that as a society we're going to put a lot of value into cryptocurrency, then I get your point. But are we at that point? Do people see crypto? I don't think so.
The reason why I don't like it
and gold and crypto, in my view, is unlimited. Right? There's no with gold and currency. There is a
So there's a fixed supply of Bitcoin. So there's only so much. There's a finite supply of it, and you cannot create any more of that specific because it's not possible. You know, the founder of Bitcoin created this system to where you cannot create any. Now, there are other cryptocurrency projects that you can do that with, but not with Bitcoin
Explain
itself.
to me like I'm a 5-year-old kindergartner. What is crypto?
So I'm
a 5-year-old kindergartner.
Think of it as if I have 10 bananas sitting in front of me, and that 10, and somebody kills and takes one, it's going to make the other 9 more valuable until you get to only one left. That one banana is going to become more valuable than the others because now there's only one left.
Right.
It's the same with Bitcoin. There's only so much of it, and it's being mined. And so many years go by, the mining gets harder and harder and harder, and it requires a lot more energy. And so
again, I'm a 5-year-old. What does Bitcoin look like? Can I hold it in my hand?
So Bitcoin is digital, and that's what makes it so great. Because I don't, just like we were talking about before the show, right? I don't carry on cash, and you said you usually don't either.
But my credit card is not the currency. My credit card is access to what is in my bank account.
But what is that little dollar? It's just a note. It's just something that somebody printed. It's the same thing as Bitcoin. When I have a specific address that says this is my Bitcoin, or this is half of the Bitcoin, or however much I get, I have an actual contract saying this is JJ Mack's Bitcoin. Nobody else can take this.
So the issue I have with Bitcoin is there has been a lot of good things that have come out, and I might be misspeaking here, but I believe the Bretton Woods Agreement after World War II, making the American dollar the de facto currency.
Right.
Mm-hmm.
There has been a lot of good things for Americans and a lot of good things for the rest of the world. So much so that other people have even made the American dollar their currency. Other countries have made, right? And when you are now introducing Bitcoin, you're almost resetting that stage. And I'm not sure now if America comes up on top on the whole crypto thing, then cool, I'm comfortable with it. But what if China? What if Russia? What if somebody else wins in that new currency war, that's where I'm like, I'm kind of nervous about crypto. But back to the subject at hand, can you buy a house with crypto? Like, can you get a loan with crypto?
Well, it's a great question, and honestly, there's almost 30% of American adults own some form of cryptocurrency now.
30%?
30%.
Johnny, do you own any crypto?
No,
I don't own any crypto.
Which is 65 million people.
So they have it down to the people that, like, it's not just like there's this much crypto. If you average it out over the population, it's 30%, but they know like 65 million people
worldwide, not America. I'm saying worldwide. 30% of adults.
How much crypto do they own on average?
I don't know that question. I don't know the answer to that question.
But the point is it is growing in the world. More people are using it.
Well, you had Elon Musk advocating for it years ago.
7% of Americans own it.
Oh, gotcha.
American adults.
But as this thing, it's becoming more and more relevant, right? You got started in 2017.
2017.
Most people weren't involved in 2017, but now everybody. I didn't know what crypto was in 2017, but now I've heard of the term.
But then there was that big crash where it dropped dramatically. What was that all about?
Just like everything else, right? You look at something like gold, and there's crashes, and there's things that happen in our economy that make things go up and go down. Right now, gold is at an all-time high. It's because people are taking their money and putting it into a safe haven. Because there's some weird things going on in our economy right now, so they just want to be in a safe haven. That will turn at one point, and then other things will go up. But with that being said, there are some really cool things that are done with cryptocurrency now that will allow you to buy homes with it even. There's a lot of holders of Bitcoin that don't want to sell their Bitcoin because they believe in it. They believe that things are going to continue to go. They think it's going to go to $1 million.
Yeah.
It's at 100,000 now. So if you don't want to sell your Bitcoin, can you securitize that and get a loan from somebody? And there are certain banks and companies that will do that for you now.
So you're using it as collateral. So, hey, instead of here's my car, here's my Bitcoin.
Here's my Bitcoin.
Wow. And you've actually done this, right?
I have. Personally, I've done this. I've actually, some of my Bitcoin, I've put it up for collateral, and they charged me interest every single month. I had to pay them back.
Yeah.
I went and purchased a home with it.
What?
I did. I got a flip. I bought a home, purchased it, flipped it, got my money back and paid it back and got my Bitcoin.
Who did you buy the home from?
The seller.
Well, he bought it with cash. He bought it with like dollars, but he traded his Bitcoin and he put his Bitcoin up as collateral. They gave him so many dollars, he went and bought the house.
But what kind of lenders are accepting that? Are these international banks that are doing this? Are there American institutions that are
how'd you
accepting the
collateralize
Bitcoin?
So back when I did it, it was an American company. It was I can't remember the name of it. This was probably back in 2019, 20. But a lot of those companies went away in our previous government. Now these companies are starting to come back. In fact, I think I haven't looked too much into it. I believe that Donald Trump just started a crypto company that you can actually go in and collateralize things with. So there is this. People want more of that. They want to be able to hold their Bitcoin. They don't want to sell. And when you have if you are one of those people, there is ways that we can do that and help you with, getting money back from your crypto and not having to sell.
Yeah. So if you want to reach out to JJ, you can just go to our website, madeformoreliving.com. We'll get you connected, or you can just Google JJ Mack and he'll pop right up. You'll see his dozens and dozens, hundreds of reviews online and on Yelp. But when we come back after this, we're going to be talking about something else that's talking about you can use for collateral. I like this one a little bit better, and it's not Bitcoin.
Hey, listen, don't take his word for it. Don't take my word for it. Check out the almost 1,000 5-star Google reviews who say that Johnny Jennings and his team at Made for More Realty are the best in our area when it comes to selling your home. There's a reason why they were voted #1 team in Roseville for the past 3 years. People are saying that they sell your home faster and for more money. So if you're thinking about maybe moving out of state, you want to retire, or maybe you're thinking about downsizing to something more manageable, or you just want to move to a different part of town, Johnny Jennings and his team at Made for More Realty can get it done. And listen to this. If you're not interested in doing showings, getting your house organized, open houses, doing all of those costly needed home repairs, they can get you at least 3 cash offers on your home, guaranteed in as-is condition. You heard me right. At least 3 cash offers on your home, guaranteed in as-is condition. That's the difference you get with Johnny Jennings and his entire team at Made for More Realty. So all you got to do is Google Made for More Realty today, Johnny Jennings with Made for More Realty, and get more for your home.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So we are back with JJ Mack in the studio with American Pacific Mortgage. He's the in-house lender for the Made for More team. And we're having a great conversation about how JJ has lost a lot of money in Bitcoin.
Can I ask you a quick question?
Made more than I lost, but yeah.
Is Bitcoin and crypto basically the same terminology? What's the difference between crypto and Bitcoin?
Crypto and currency involves all the different products. It's just, so it could be Ethereum, it can be Cardano, it can be Bitcoin, XRP.
So Bitcoin is a specific type of cryptocurrency.
It's like a dollar
Correct.
versus the pound versus the peso.
Right. Okay,
It's like
gotcha.
currency,
That's what I thought.
and then you have your different denominations of the dollar, like you said.
Okay.
All right. So, so you got, when did you first get into crypto, or Bitcoin?
Yeah, so I bought my first Bitcoin in 2017. It was sub $10,000.
You bought a full coin?
No, but I had a few Bitcoins back then.
Are you serious?
I had been buying them daily. I buy a little bit every single week. I got kind of into it. I was watching all the podcasts and trying to, learn more about it.
So when it took off and you eventually sold, this is a problem I've heard about other people having Bitcoin, is they've made a lot of money on paper, but then they don't want to deal with the tax ramifications of selling. What does that look like?
Yeah, so I made the mistake that everybody mistakes initially, right? I bought it, I made a lot of money on it, and I didn't sell because, you make money and you want to continue to gamble.
Yeah,
Right.
It's a
This
good
is gonna
feeling.
go on forever.
Yeah, and so, but in reality, if you look at it that way, you're going to end up losing. Mm-hmm. And so I lost all that and then some.
Wow.
And back in 2018, 17, then 18, and then I continued to get out of it. I said, you know what? Forget this. I'm done.
But then you got back in.
Then I realized how awesome it actually was. And then now, going forward, end of 18, 19, 20, continuing on, it's been a really good thing. And I have, obviously sold and purchased at the times that I needed to.
Okay. But that's something to be mindful of. So what I've heard other people do is they go to other countries and cash in their Bitcoin.
Yeah, it's a little scary. I don't know. I would just pay the taxes on it. I mean, if you're making money, you might as well just, pay some taxes back.
How do you know that something like the downturn won't happen again?
I think it will happen again. But that's why I do think that overall, things are going to go up, as you continue. So if you want to hold for the long run.
Like real estate. Yeah. Or like people who buy stocks, mutual funds, 401ks, I think it's going to go up over the long run.
It's an investment.
Yeah, it's an investment. Maybe. We'll see. We'll see in the long run. It's untested. But speaking of investments and how you can collateralize, we were talking about Bitcoin, cryptocurrency. You can use your home in the same way. And you can get what's called a home equity line of credit, a HELOC. And JJ, you were saying that there is it unprecedented, or is it just a lot of people exploring this option now?
There's more people now than I don't know if it's ever before, but it's a lot of Americans needing to tap into the equity of their home. And so the percentage of those people right now, 66% of Americans have interest rates below 5% on their mortgages.
And they're like, I don't want to sell. I got all this equity, but what do I do? How do I tap into these? How do I cash in on my Bitcoin? How do I cash in on my house coin? What do I do? And that's the home equity line of credit.
Yeah, because like you said, if you've got an interest rate in the 2s and 3s and 4s or even 5s, you probably don't want to refinance your home to pull out some money and have a 7% interest rate today or 6.5% or whatever it ends up being.
So a cash out refi, that's what we're differentiating.
Correct.
So some people are like, oh yeah, I can pull my cash out and cash out. The refi resets the term, 30 years, but now you have that higher interest rate. If they do the home equity line of credit, it's a second mortgage, so they have their 2% interest rate that's already they're used to already. This is another loan, right?
Is that what it is?
Yeah.
Okay.
Yeah, it's a second mortgage, and it's, if you look at the average mortgage closing today, 8 out of 10 mortgages are home equity lines. 83% of mortgages
Crazy.
closing today are home equity lines.
So what are people taking the money out for? What are they using it for? Why is there such a need right now?
They're buying crypto.
I hope so.
No, I don't know what they're doing. So yeah,
No,
go ahead. I mean, you've done a number of
Talk
these.
to them like, hey,
Yeah.
what do you need this money for?
Yeah, we're doing a lot of them, obviously. And so what we're seeing most people doing is they're paying off their credit card debt. They're paying off debt. We came out of this market where, during COVID, there was a lot more money that was printed and it was handed out. And so people were used to living a certain way. Mm-hmm. And because of that, or maybe they did go buy crypto. Maybe it all went down the drain. I don't know what they did with it, but at some point they did need more, and so they opened up credit cards. And now, if you look at that credit card debt, the average American has over $23,000 in credit card debt, and the average interest rate is almost 24%.
Yeah.
Crazy.
So if there's a way to get money out of your home at a 7, 8, or maybe even 9% interest only in a lot of cases, that's a much better way to spend your money than at 23%.
Yeah. So what they're doing is they're paying off their credit cards, restructuring it into a home equity line of credit, and then they just have a lower monthly.
Mm-hmm.
They're not drowning in credit card debt. Some people are using it too to fix up the house. If they're thinking about selling in the next little bit, they can use it to fix up the home.
Totally.
It's your money to do with as you see fit, and it's basically your house becomes a credit card, for lack of a better term. Like you have a credit line, and you can draw on it how much or how little you see fit. Mm-hmm. And then,
So then what happens when you go to sell the house?
It's just another debt. So I just opened up one for myself because, as you know, we're building a detached garage and an ADU on our home. We just need a little more space, and so I opened up a credit line.
like a Taj Mahal over there. Or what's that guy who owned the newspaper? Hearst. It's like Hearst Castle. He kept adding on. JJ's house is like Hearst Castle. He just keeps building. So, but you got the home equity line of credit.
Yeah, and so let's just say the home equity line was a couple $100,000, and my other mortgage is $300,000. So let's say I have a $500,000 loan total, and my house is worth $1 million. That means when I sold that house for $1 million, $500,000 would go to the banks, $500,000 would go to me.
Easy. And then the fee, and it's pretty fast though, right? Like you can tap into this home equity line of credit, especially with you guys, like really quickly.
Yeah, there's different types of home equity lines. There's a home equity line of credit, and that we can either give you a fixed interest rate on or adjustable rate, just depending on what you're looking to do. So a lot of people that want to use all the money right now want to be locked into something that's fixed because they're going to start paying it off. Another person that might not want to utilize all of it might want to have an adjustable because they're like, well, I think the interest rates are going to keep going down. I can just keep paying interest only for the next few months. It doesn't really do any bad to me.
Yeah.
So
can you refinance these home equity lines, or are they like locked in?
You can.
Okay.
Yes.
Interesting. So even if you pick an interest only, or if you pick a fixed and it's not working, you can
refinance.
Okay.
But the average American has $315,000 in equity in their home. Yeah. And so it just goes to show that if you're sitting there and you're in trouble, you're trying to pay off your debts, you're just not, you feel like you're going to have to file for bankruptcy or you're going to have to foreclose on your home, there's other options out there.
Yeah, you don't even need to sell. You don't even need to get you don't need to downsize and get a different place. Just maybe pull out a home equity line, and that might be the lifeline you need until you get to wherever,
Unless you're one of the fortunate few where Biden paid off your college loans.
Did he do that?
For a few. Yeah, hello.
Man.
You weren't one of those lucky people?
No, I graduated.
Was so frustrated. Mike and I, my co-host over here on the other radio station, oh my gosh, we were so frustrated because we paid off our loans out of our own pocket. Mike worked,
Me too.
sweat and blood, hustling while he went to school to pay off those loans. And then you've got...
You see pictures of me from college, and I look gray because I was working so much. Like, I did not look healthy. But I graduated college debt free.
Yeah.
But then...
Little did you know, you didn't have to. You just sit around waiting. And the government was just going to write you a check and you're all good.
And there's other people who, went out and partied and had fun and used that money to buy beer and, Anyways, they don't have a radio show. Haha. But anyways, if you want to reach out to JJ, because you guys, you have tons of different, so if they went to like a Golden One or if they went to their bank's going to have a product. But with you, you're able to broker out home equity lines of credit so you can custom tailor a solution specific to their need, right?
That's correct. Yeah, you got it.
So you guys do it much faster. So if you need the money quickly, if you're tired of getting the runaround or not getting straight answers. Oh, this is a great story. So I was sitting in a cigar lounge with
you smoke cigars
every now and then, only on days ending in Y.
Right.
Okay, and only smoke them one at a time. But so I was in a cigar lounge with a friend, and he was telling me, I'm trying to get this home loan. I want to buy this investment property. And he had all these questions. And I'm like, these are pretty basic questions, but you should not talk to me. I'm a real estate agent. You should talk to a lender. So I called JJ up out of the blue, and you can hear his daughter is playing in the background. I'm like, hey, man, you got a second? He's like, yeah, sure, what's up? You're on speakerphone. We've got this guy. He's got some questions. This guy had been trying to get answers to these questions for weeks. He was playing phone tag. He was texting back and forth with this loan officer. JJ had it handled in 15 minutes. So if you're getting the runaround, if you're not getting honest answers, if you feel like, and we'll touch on this in the next segment, your loan officer might be a little maybe unethical, you need to give JJ Mack a call. Just reach out to us at madeformorerealty.com or search JJ Mack on Google.
So, hey, if you're new to the industry, you're a new realtor, and you find yourself struggling, unable to reach that success you were hoping for, don't do it alone. Reach out and be a part of Johnny Jennings and his team at Made for More Realty. Maybe you've been around the block for a while, you've got a lot of years under you, but you've reached this plateau, and you want to be more successful. You want to sell more homes. Again, don't do it alone. Reach out to be a part of one of the best teams in Northern California. That's Johnny Jennings and his team at Made for More Realty. Just go online, Google Johnny Jennings and Made for More Realty.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So thank you so much, JJ, for reminding me. We almost moved off this topic, and there is still some ground to cover regarding home equity lines of credit. Because yes, you can pay off your credit cards. Yes, you can, have that home equity line for a rainy day should you need it. But you can also use it to get your house ready if you're considering selling the home, right?
Yeah, it's a great way to go, because, a lot of people think, I'm trapped. I got to be here and my house isn't really prepared to sell. It doesn't need to be. Just come get a home equity line, utilize those funds to redo your pool, redo your kitchen, do whatever you need to do. Yeah. Then it'll be ready to sell.
So I have a client right now who's considering making a move. She's gone through some horrible stuff, like life-altering, devastating events, and she's looking to move out of state and start fresh somewhere else with her son. And but throughout all these events, she's racked up a lot of credit card debt. She couldn't maintain the pool. The fence is falling over. The flooring's all messed up in the house. And so what she's considering doing is taking out a home equity line of credit, paying off her credit card, so that way she gives her a little bit more money on her monthly budget, and then using some of those funds as well to get the house ready. And so if you're considering getting your house ready, and if you're considering going on the market, please reach out to us. Just Google madeformorerealty.com, come out and we'll give you a consultation, and we'll identify what things you should focus on. But if you decide you want to move down this route, what I typically recommend is at least get a pest inspection. If you're going to get and if you have a pool, maybe get a pool inspection. Get a home inspection, get the roof inspected. Because then if you're going to pull this money out, you know exactly what a buyer is going to see when they do their own inspections. So you're able to focus in and really focus on the improvements that are going to give you a better return on your money rather than just shooting blindly in the dark. But there is something like you need to be aware of about home equity lines of credit. Right, JJ, especially if they're going to be listing their home in the near term, like how would you recommend they have that conversation with a potential loan officer?
Well, are you speaking of maybe wanting to open that up before you list your home?
Yeah, so before versus it being on the market. Let's say somebody's been on the market and they're like, oh my gosh, there's all these repairs. I don't have the cash. I'll just pull out a home equity line of credit.
Sure.
Are you able to do that?
Yeah, so typically you're going to want to do it before you put your house on the market. Otherwise, you're going to have to pull it off, and then, you're going to have to then, wait a few months before you can then qualify for a home equity line. The bank wants to see that, this is still their home, they're living there. But if you do it right now and you wait until you fix up your home, you do the things you want to do, then you can go put it on the market after.
Got it. So if you're thinking about doing this, make sure you have the conversation with your real estate agent or you have the conversation with myself and my team before you go live on the market, because If you go live on the market, it's going to be really hard, and it's going to be not necessarily hard. It's just going to take more time for you to get that home equity line of credit approved. But there's also another great thing that you can do. So let's say we've talked about paying off credit cards. We've talked about fixing up a house, but you can actually potentially buy a house on a home equity line of credit, right?
Mm-hmm. Yep.
So how does that work?
Well, if you have enough equity in your home, like we talked about, there's these Americans out there that have a ton of equity sitting in their home. You can literally take out however much you need, up to the usually 80% loan to value. Sometimes they go as high as 90% loan to value.
Oh wow!
And you can take that and use that as cash to go purchase your next home. So your offer really stands out strong because you're buying the home with cash because you don't have to get another loan. And then you can come and refinance that after if you'd like.
So out of a HELOC into a more traditional mortgage.
Correct.
And the banks are fine with that? Like are the rates different because is it seen as an investment property because you're living in a home and now you're buying another home? Like how does that look?
Yeah, so a lot of times the way this will work is you're living in a current home that you enjoy, but you would like to potentially purchase something, an upgrade, or maybe you want to downgrade or whatever it looks like. But you've got this equity in your house. So I'm going to pull out enough. I've got my $500,000 home equity line there. I'm going to go buy this next home. You do. Now, the current home that you were living in, you have this home equity line on. But you have your new home that you're living in today that you've purchased with it. Now, you don't have a loan on this new house. So you go take cash out of that one and go pay off the home equity line on the old home.
Got it. Okay. So they're not necessarily asking, hey, what are you using this money for? You're just getting a home equity line of credit so you can have a home equity line of credit and then you go out and buy the house.
You can, yep.
Got it. Okay, cool. Well, that's super helpful. And so if they want to reach out to you, they can go to madeformorerealty.com. We'll get you connected. Or they just Google JJ Mack, and you'll see his wonderful reviews there online. But there was, we were going to talk about something else, and we will. Sorry, my Remarkable is not cooperating with me.
Technology's
gosh.
These days.
cooperating.
Yeah, tech isn't working. You had a stat recently that you showed me about the number of loan officers in the market and just how it's gone down over a period of time. And if anybody has tried to get a home loan, and recently, you've probably been blown up by dozens and dozens and dozens of hungry loan officers trying to solicit your business. And so, JJ, just between the last 2 years, about how many? So, just give us those stats really quick to set the stage.
Yeah, the competitiveness is fierce right now in this industry, real estate and loans. 2022 there was 395,000 loan officers. And now today there's less than 100,000.
Wow. So almost 75% of the loan officers have left this industry because it's so hard.
Very difficult.
So imagine there being a bunch of, fat and happy cows. Now you're down to the 4 fat and happy cows. Now you're down to one really skinny cow. And that one little skinny cow is going to do whatever he can to get some food. And so when somebody applies for a loan, unfortunately, they get their credit pulled, that information is then shared across the credit bureaus, or how does that work?
Yeah, a lot of times, it's all public information when you have your credit pulled, unfortunately, and it goes out to every single lender in the world almost. And so these guys will literally call you milliseconds. They've got AI now that just is on it. And they will call you and they will offer you things that you can't even imagine.
Like what?
Interest rates that are unattainable.
Bitcoin.
Yeah.
No, interest rates is a big one. Low fees.
They'll basically, you'll be able to tell them what you want, and they'll promise you that.
But that doesn't mean they'll deliver on it, and that's the big differentiator. So these imagine again starving cows. These people want food. They need. I mean, this is how they provide for their families.
Right.
Like this. I'm not trying to make light of their situation, but where I think a line needs to be drawn is if you are not doing a lot of business. The question I would be asking is why? Why are more people not working with you? Is it an ethics thing? Is it you don't have access to programs? Or are you not good at your job? So why are you not doing a lot of business? That's maybe a question that I would have. And then 2, are you being honest with me? Are you? Because the first time I bought a house, I was locked in. It was a referral from one of Valerie's parents' friends. She'd been in the industry a long time. She said, hey, here's this great lender. You should work with him. I said, great. Got pre-approved, and all of a sudden I got a call from somebody, similar to what JJ's describing. And he's like, oh, yeah, I can get you a better rate, and I got the special grant program, and it's going to save you like $10,000. Got to the end of the situation. This is my first time buying a house. Ended up buying this house at the closing table. I'm on the lake with my dad at my bachelor party, and I get a call, and they're like, oh, yeah, you need to bring an extra $10,000 to the table. I'm like, what are the freaking odds that it's... So he just lied to me. So I went away from this trusted resource, from this referral partner, into somebody that I didn't know, and I ended up owing the money and then some anyways. So that guy lied to me to get my loan because he knew once I was that deep into the process, the likelihood of me switching and starting all over was next to none. And so that's what's happened to me, but that's what's happening to people right now, even more so because lenders are being more aggressive with what they're promising clients, right?
Yeah, over-promising, under-delivering.
You just had an experience with a veteran.
Yeah, and that one sticks out to me. As a veteran, we actually employ several veterans at our mortgage brokerage, and we take it very seriously what we can do for vets. And this guy came to me, trusted referral source. We got him approved. He went out looking for a home. He put the offer in, and somehow somebody found his information, called him up, and promised him something that was way too good to be true. And I told him that. A better interest rate with no costs. It gets to the final closing table, like you said, a couple weeks later, and sure enough, $14,000 popped up, and he had to come up with $14,000. He didn't. He did call me back, and we figured it out. I had kept his loan open because thinking this was going to happen.
Yeah.
And but that's how it is right now. It's very competitive.
It's just sad too when you take advantage of veterans.
Mm-hmm.
Yep.
That's what really sucks.
Well, it's just lying.
They're just straight up lying and try and get the business because they know they're probably never going to see you again, but they're going to get paid. It's gonna put some money in their bank account so they can stay in the industry a little bit longer.
Is that what they mean by predatory lending? Is that where that term comes from?
That's one of the things. Yep.
Okay.
Mm-hmm. There's lots of different ways of predatory lending. That is absolutely one of them. Being able to take advantage of somebody in some way. Predatory lending. And now this particular guy was smart enough to call us back and he was very humble about it. A lot of people will just, move forward with it, unfortunately.
I did. Yeah. So when we come back, we're going to talk about more about what's happening in real estate and a little real estate gossip.
Hey, listen, don't take his word for it. Don't take my word for it. Check out the almost 1,000 five-star Google reviews who say that Johnny Jennings and his team at Made for More Realty are the best in our area when it comes to selling your home. There's a reason why they were voted #1 team in Roseville for the past 3 years. People are saying that they sell your home faster and for more money. So if you're thinking about maybe moving out of state, you want to retire, or maybe you're thinking about downsizing to something more manageable, or you just want to move to a different part of town, Google Made for More Realty today, Johnny Jennings with Made for More Realty, and get more for your home.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So I was super excited after watching the Grammys. Can you guys believe it? Beyonce won a Grammy. Isn't that great news?
You are joking. You didn't watch the Grammys.
Fired up here.
You're
right.
Not
I did not.
excited about it.
I didn't even know they happened. But I guess Beyonce won like another Grammy. What was it for?
Don't get me started.
How many did she win now? 30
Oh
something?
33.
33 Grammys.
It was
Do you know
33.
how many Grammys Sinatra has? 3. Do you know how many Grammys the Rolling Stones have? 3. Do you know how many the Beatles have? I think it's like 4 or 5. You know how many Grammys Beyonce has? 33.
Why
Come on, something's wrong there.
Well, and the worst
Give me
part
a freaking break.
The worst part about it is it wasn't even for her genre of music.
No. Well, she came out with a country album. She did come up with a country album. I don't know.
This ain't Texas.
Right.
Yeah, that's all I got.
Wait, how did it sound?
Say it again.
Say it again. What did it sound like?
Ain't no hold 'em. That's all I got.
But I don't know one country. You like country music, right?
I do. So does JJ.
I don't know one.
Real country.
I haven't run into one person. I'm not a huge country music fan, but I haven't talked to one country music fan that agrees with that.
Well,
I mean, come on. The
here's-
Grammys are a joke. That that industry, that awards is a joke. It means nothing anymore.
Here's the thing.
Who even watches it? Does anybody? It's
a freak show. I'll tell you that. It's a freak show for one. It's a joke.
Here's the thing that
we have Miley Cyrus coming on and say, "I don't know who's gonna win, Beyonce, but I'm gonna mention your name." And then you have
really?
She literally said that.
Man.
I think they pass out crack backstage. I think that's what they do.
Probably.
I think it's a drug festival backstage, and they come out, and you've got Will Smith's family. His son is wearing some kind of house on his head.
Yeah.
His daughter's dressing up in underwear. Get your family's house in order, dude.
It's terrible. On my son's head. It's on his head. But
I got to go look that up.
So here's the thing about those award shows or anything really. Like it's all. What's that quote? I credit it with a guy by the name of Brian Gruder, but I think maybe Mark Twain or somebody like that said it.
Credit. Anytime you have some type of interesting smart quote, just credit Mark Twain. You'll sound smart. Mark Twain once said, "Don't believe everything you read on the internet."
Exactly. But the quote is, "Believe none of what you hear and only half of what you see." And so when it comes to these award shows, like I don't believe, really any of it. And
what don't you believe?
That they genuinely won that award. When it comes to the Grammys, when it comes to the Emmys,
it's a political thing.
Totally, it is a marketing platform for those artists and for those labels. So when you look at it through those, honestly, I don't trust a whole lot of sports. Super Bowl's coming up. Like
you think the Super Bowl's rigged? You think the refs are in on it and they want the Chiefs to win?
I think whoever is going to help make the NFL and all the franchises more money ends up winning.
I think you're right. Whenever money's involved, there's going to be corruption.
There's corruption, and when you can consolidate,
that's harder to pull off.
Well, here's the thing.
That's a little harder to pull off.
So they're bad calls. They're bad calls.
You have the Kansas City Chiefs though, and Travis Kelce is now dating
Taylor Swift, which has increased ratings.
That's going to increase viewership.
Sure.
So that's what you would think would be the rigged part of it.
I don't know. That's tough though. You have a lot of people watching the play. With the awards, you don't know what goes on behind the scenes. You don't know how they've been messing with the votes or how they decide who the winners are. That can easily be done behind the scenes. With sports, it's right there in front for everybody to see. You can disagree with certain calls, but
there are oftentimes many calls. Like there was a call when Brady was playing that was I like Brady, but that was a bad call.
I know,
and he ended up winning the Super Bowl because of it. The Chiefs are in the Super Bowl because of a bad call this year. And so anyways, my point is, don't necessarily believe everything you see. Those people who are on the news, like I've gotten to know some people, like, we've been on the radio show, I've gotten to know other talent, I've gotten to see other people and meet other people who are on television shows. They are regular people. They are reading scripts. They are actors.
Oh, sure. They're teleprompt readers is what I would say.
They're teleprompt readers. They're not even actors. They're teleprompt readers. But they're not giving you actual information. They don't know what they're talking about, but they're in this position of power, of authority, to where you trust them, and it's just been happening for a long time. So let's take this back to the 1930s, late 1930s, early 1940s. Pearl Harbor was supposedly a surprise attack. Right? A book came out.
I had no idea Johnny Jennings was a conspiracy theorist.
No. A book came out by a guy who was in Pearl Harbor. It came out in the 80s. It's been out for a long time. But I gave it to my dad, and he's reading it, and I'm like, I'm not interested. I really don't. It's too much. It's like 800 pages long. This is a huge tome. And he's like, Johnny, like you've always heard that the aircraft carriers were out at sea. Like luckily they were out at sea. They knew. The government knew that Japan was planning the attack. They wanted to get sucked into the war. So that way, Americans would then want to be a part of World War II because they didn't. Prior to that, they did not want to be a part of World War II. And so this has been happening.
Who's this
for
guy?
Decades.
Who's this author of this book?
I'll get you the
How
info.
do you know he's legit? How do you know he's just not coming up with this stuff to write a book?
It's super well documented.
Well, it sounds like he was
at Pearl Harbor. Yeah. It's super well documented. And as you know, what's Elon Musk say? The difference between a conspiracy theorist and a conservative is the difference between those two is 6 months. They're a conspiracy theorists at first, and then all of a sudden 6 months comes out, and it's like, okay, there's some truth here.
Yeah.
And so what does this have to do with real estate? What it has to do with it is I was on an appointment recently, and the guy was very, very, very mad at this real estate agent that he had fired. he'd worked with this person. She'd got the house in escrow once, and then it fell apart. And then because he thought she did some shady dealings, and then she got it back in escrow, and then it fell apart. And he was just livid with this person. And I was like, well, how'd you find them? And he told me, well, I found her on Zillow. Zillow recommended her to me, so I figured she has to be good. And and this just happened like recently. When I heard that, I was like, oh my gosh, is that really what the consumer believes when they see people on Zillow, on Realtor.com, on any of these platforms? Do they believe that you have to be good to be featured there? Because if that's the case, like that is not at all what's happening. They are paying to be there. It costs money to be there. They don't vet you. They don't care how many deals you have. They don't care about how many 5 stars you have, what your history is, how long you've been in the industry.
They care about how much money
They
you're
just
willing
care
to
Well, there
about if
should
you're
be a
gonna pay.
disclaimer, like there is when you do a Google search, or even you're on Amazon that says, "Hey, this is
Ads
sponsored.
or whatever.
This is a sponsored recommendation," type of thing.
There should be.
There should be.
It should be more. It should be more clear.
Yeah.
Because apparently the consumers don't realize this. Like I don't advertise on Zillow. I think it's a racket. I think they're taking advantage of the consumer. You create a profile. They're selling your data to tons of people. We've actually created an app with my company. We've actually created an app that way if you log on, you're searching there, your data is not getting sold to the highest bidder. It's not getting sold to a bunch of different loan officers and a bunch of different real estate agents. And it's not getting sold to all the ancillary services like insurance and home warranties and everything else that Zillow's able to mine off of your activity. And so, anyways, that's when you're online and you're looking at people, don't just trust what Zillow says because they're paying to be there.
Well, but you've said don't believe anything you hear and only half of what you see. Is that what you say?
Yep.
Okay, so how do people know who to trust? I mean, what kind of evidence or information is credible anymore then? It just seems like everything's questionable then.
Yeah.
What can you trust? Who can you believe?
Exactly. So if you're listening to this and you're saying, well, Johnny, why should I trust you?
Yeah.
You know what if I'm not supposed to believe anything I hear, why should I even listen to you? Okay, that's a great point. And my answer to that would be, don't trust me. Go out and do your own research. Like there's so much resources available now for somebody empowering people to go out and find good real estate agents to work with, good loan officers like JJ Mack to work with. Like, do your due diligence. I said, well, how'd you find her? Like, did you read up her reviews? Did you like do any, background check on her? He's like, no, I just figured Zillow wouldn't steer me wrong. And he was 100% off base, unfortunately. So to answer your question, how do you do some due diligence? How do you find the good ones from the bad ones? Do they have a Google My Business profile? We couldn't find this person on Google My Business, this one that he was working with. She didn't even have a Google My Business profile. She had like no reviews on Zillow. I think she had 2 sales, like no track record of success. She was just paying some money for a specific zip code, and she was getting the leads. And so if you're out there looking for a good real estate agent, look at their reviews. Look at what people have to say about after working with them. Oftentimes I'll hop on, before I go to a restaurant, I'll hop on and read the reviews. And I'll look at the worst reviews first. How many of those are there? How long ago were they there? And, does it sound like somebody's just complaining, or is this like a real problem? And then move forward from there. And then you can ask them questions like, how long have you been doing this? How many houses have you sold? What's your marketing plan? We have a 195-point marketing plan that we take our clients through, step by step by step by step. Is the person that you're interviewing to sell your house, do they have that? And so that's just do a little bit of due diligence. Don't believe what I'm saying. Do your own research, so that way you're empowered to find the best person for you. That makes sense?
Yeah, I think people appreciate that too. I think people appreciate when someone says, hey, don't take my word for it. Do your homework, critique me. Find the information that you need, go out there, find reviews, do your homework. And if you don't find that I'm the right person, then that's fine. But be open to that.
Yep. And so what we'll actually, so agents, if you're listening, like this is a tip for you, is what I will do in the living room is I'll say, great, who else are you interviewing? And they'll tell me the person's name. I'll say, okay, great. Let's look at their Google profile. If they are going to market your home to the best of their abilities, let's see how good they are at promoting themselves, because they're going to promote themselves before they promote you. Okay, well, shoot, I can't even find them on Google. Oh, they have 23. They have a 5-star rating or a 4.9 star review rating, but they only have 23 reviews. Okay, well, look at mine. I have over 1,000. reviews.
Well, and the cool thing about reviews too is most people will leave a review if they don't like something. It's much easier to say, "Man, that was a terrible experience. You should never use this person."
Yeah, I don't write very many positive reviews.
But for someone like the Made for More team and Johnny Jennings, if you go on his Google page, he's made such an impression on his clients that they're leaving him like 5-star reviews.
Thank you. Yeah,
and so that's important.
And you can hop on homes.com, look up sales. Look up that agent's sales history. You can hop on Zillow.com and look up that agent's sales history, and it's like, okay, they've sold 5 houses in the last 12 months. I sold a lot of houses, way more than 5 in the last 12 months. So because oftentimes they think that we're all the same. Like if you're listening to this and you're a buyer or a seller, you're thinking, hey, all real estate agents are the same. It's just I prefer to use my sister because she's my sister. We just sold the person's house in Lincoln. They're going through a rough patch, and they used the sister, but they want to give the sister a shot. Sister didn't get the house sold. They end up calling Valerie and I. We end up going out there. I list the house, and it sold the first weekend on the market. This dude was so nervous that his house wasn't going to sell because he's worried because there's a lot of new builds going on in his area. Prices are going down a little bit. They just bought the house not that long ago. They don't even know if they can afford to sell, and we were able to get the house sold the first weekend.
Well, I think you have to convince consumers that one, you are different. Because you're right, you have to get past the stigma that all realtors are the same. All they do is they list it and they just collect their commission. That's all they're doing. Maybe they're taking some pictures and putting a sign in the yard. And so you all do the same thing. Yeah. And so it doesn't matter who's going to give me the lower rate or, is it somebody I know who's going to give me a better deal? And I think that applies for lenders too. All lenders are the same. I'm just looking for who's going to offer me the lowest rate. That's what I'm looking for.
Yep.
And so you have to get past that idea that consumers have.
So if you are different, what is it that makes you different? And also, are you different enough to make sense of the value difference? So this other lady was offering like a really low commission in order to help him sell his house, but now she's drugged the process out and possibly cost him $40,000. Okay, is saving a little bit of money on the commission worth losing that $40,000? That's something you're going to have to figure out. So the other side of that coin is, hey, if I pay a little bit extra, what am I getting for that? Am I getting what I'm paying for? So you got to really make sure that you understand what that agent is offering.
And I think consumers also appreciate when you educate them, when you bring them some value right off the get-go, where you educate them about the process and explain things to them, like taking your own time before you get paid, before you've agreed to anything, just taking some of your own time and helping them right off the get-go. Educating them. People appreciate that. It's like, hey, whether you go with me or not, can I give you some help, some guidelines, some tips? Yep. And they appreciate that. That goes a long way.
So much. So I was on an appointment recently, and this guy, he bought the house not that long ago, but I think he owes very little on it or nothing. And the house is probably worth, 1.2, 1.25, somewhere around there. So it's a nice house. And I do the appointment. He doesn't sign. He doesn't agree to work with us. And then he gives me a call back and he goes, hey, Johnny, I have some questions. I just got an offer from somebody. They're willing to cash deal. They're gonna buy the house and they'll let me stay here for another 30 days. They're not going to charge me to stay here. And they're willing to go up to $1.1 million. And I think I might make more money with that route rather than going with the more traditional route. And I said, you know what? It's close. You might make more money with us, but if they're offering you 1.1 and it works out with your situation, absolutely 100% go with them. Like if I was in your shoes, I'd probably take that based off his situation. He needs the certainty. And the timelines are really critical to him. So I'm like, absolutely. You might take a little bit of a haircut, but not a whole lot based off your net if you go the more traditional route. But can I give you some advice here, some words of wisdom, some things to look out for? And he's like, absolutely. I said, okay, great. If they offer you 1.1 million, this cash buyer, and then they start coming down on prices, on the pricing. I also asked him, have they even been to the home? He's like, no, they haven't seen it yet. Okay, that's a red flag. How do they know what they're going to pay? How do they know they're going to pay $1.1 million for something they have never seen? That's a red flag. So one, they're probably just telling you what you want to hear. But when they come out, if they start backing you down on price, if there's a convenience charge of 5%, then all of a sudden the numbers are going to change, and it would make more sense for you to go forward with the traditional realtor. But if out the door, you're getting $1.1 million, then go with them. But what oftentimes these cash and buyers will do is they'll come in high, they'll tell you what you want to hear, right. And then in the fine print at the very end, it's like, oh, by the way, there's a 5% convenience charge. Oh, by the way.
Just like in the lending field, right?
Exactly.
Tell you what you want to hear, and then when it's time to sign, everything has changed.
Yeah. So anyways, if you're
right,
at least in some aspects,
right? Well, no, yeah, I'm not saying in your particular situation, not with JJ Mack, obviously, but you've mentioned stories and examples from other quote unquote predatory lenders who go out and look for these people and take advantage of them, right? They tell them what they want to hear, and then when it comes to sign, wait a second, this is not what you told me.
Because there's so many things, moving pieces going on at the end of that process that you don't want to start over.
You don't want to start over.
Like, I might lose the house I put an offer in on now that I have to start over.
But going back to that guy you were talking about.
Yeah. So anyways,
what ended up happening?
So that was really recent. That was Friday. Today's Wednesday, and so we're still talking. We're still figuring out a way forward. He hasn't agreed to make a decision one way or the other. But that's the type of person that you would want to have in your.
Yeah.
If it was my dad, because this dude's older. If it was my dad, I'd want him meeting with a realtor that's going to treat him like that.
Yeah.
And tell him, hey, absolutely go with that other option. But if they try to retrade on you, these are some red flags to look out for.
Yeah.
And
they're looking for people that are there to serve and help them, not just out for them.
Correct.
And you have to show that.
Yeah. And in the long run, you win. JJ, you mentioned that there was a.
We're running out of time, so real quick, go ahead.
Oh, I was going to say the housing wire thing, but we can cover that next time.
Yeah. No worries.
By the way, last thing I will say is first impressions. We were talking about leaving people with value. If you're a real estate agent and you want to leave a strong first impression, here are two things I recommend you do. One, give them your business card. You walk in, shake their hand, say, my name is, give them your business card. Two, give them something. Whether it's a gift card, a cookie, whatever it is, give them something. Now, all of a sudden, you're engendering goodwill.
Oh, I like that.
And it doesn't cost you a whole lot of money to just be nice to somebody. Give them a business card and give them a little gift.
We'll talk more about that on the next show.
On the next one. Thanks.